Jeff, Zach, thanks for joining me.
Hey,
Hi,
Steve.
Steve.
Thanks for having us again.
Hey, we're talking about market adjusting to mortgage rates around that 7% level that we've kind of been going back and forth to. We're seeing pending home sales. They slipped about 5.5% in December, a little bit below the year ago pace. New home sales, though, ticked higher to 3.6% month over month, 6.7% year over year. We're seeing the median list price of new homes slip in 0.7% to 449,967. And we're also seeing with new and existing home sellers, nearly four times more likely to get incentives in terms of off their mortgage rate when buying new versus existing homes. Uh, some of you guys' thoughts as we see this market kind of adjusting to a higher rate environment when it comes to residential real estate.
Well, that's a lot of information to digest. I don't know that I agree with all of it. I think that's going to be market specific. And the reason I say that is, well, actually, let me backpedal there for 1 second. The one thing I don't think is specific is that no one wants crap. So if it's sitting around or there's price adjustments or otherwise, it's just stuff that people don't want. When I say that it's market specific, I guess what I'm referring to is in certain markets, I'm seeing pricing go the other way and still growing exponentially. And when there's a good product, it is hotly contested with multiple buyers and bidding wars still. And that's even with 7% interest rates. And I saw it on the low end of the spectrum and the high end of the spectrum. So I think you've got a lot of pent up demand, and I don't think you've got a lot of great supply.
Well, I was going to say the other side is I think people are starting to realize that maybe there's a little bit more of a new normal than 2% and not really 9%. And maybe it's somewhere in this 7% and, get fucking used to it. Hate to use that language, but truth is like, this isn't really that different than, before this generation that's starting to buy more properties. This is still pretty low. A lot of those, a lot of the generations before that were looking at 12, 18, 15% interest rates. So, I think it changes, but the other side is one of those top named markets was Detroit. I hate to say this, but who the hell wants to live in Detroit?
I
Um,
think you're going to offend a lot of people that live in Detroit.
I mean, yeah, they got great sports, but nobody wants to live in Detroit. So, you know,
Yeah, I think that goes to we saw St. Louis ranked as a top luxury housing market in the US. Yeah, Detroit in their third straight quarter at number two. Um, top markets include like Canton, Ohio, Trenton, New
Trenton,
Jersey.
New
I think
Jersey.
affordability. I mean that's what this
Yeah.
is screaming out at me is that, I think most people they win $100 million in the lottery. They're probably looking at some other locations, Miami's pretty high on that list. But I think if you're not winning the lottery, a lot of folks are like, where can I afford? And that's where you're seeing some of these areas pop up. And I also think that's what you're seeing too with new home sales. So showing some more strength, but also showing some more deals. Is that, in the areas where you can build, we're seeing new product come on just because, we've talked about the golden handcuffs. I mean, some of the people sitting in those low fixed rates that don't have to sell, they're just not going to sell. So you're going to have to bring new products. So yeah, I think this is a story of the market adjusting to these higher rates, some new product on there, some people having to kind of pick metros that are more affordable. I think this is kind of the new normal to your point, Jeff. They've
Look, I
got,
mean,
yeah.
it's been years of HGTV trying to do some sort of fix and flip and in somewhere like Detroit. There was a couple of years where there were a couple of people doing them. And maybe that's just allowed people to see that they can buy stuff for cheap because nobody, and I hate to say nobody wants to live there. People sure want to live there, but to your point, people are looking for affordability. And some of these areas aren't, areas that are on what I would say is the top choice for a lot of people to live.
Yeah, I mean, another factor here too, though, is some of those really nice areas, like I don't know, the Palisades in Los Angeles or parts of Florida that they are more prone to disasters. And you know what? Now you're having to pay up for it in insurance costs if you even can get the insurance. And what I will say for some of these other areas, that kind of look as having a less ideal climate, the climate actually has fewer disasters that destroy your property. So,
Yeah, I'm gonna disagree. I just had insurance rates in the DC Metro and part of Tennessee, West Virginia, and otherwise they all doubled. So you're feeling the impact almost no matter where you live at this point. Um, I'm still team quality. I think that you're going to see team quality for the win. And affordability, I get, but anything that's not quality, I'm guaranteeing it's still sitting there, even in those markets.
I think that's a great point. And I think there is that point of how you look at this as if you're a first time home buyer and you need to buy somewhere affordable, and how you look at this as you're looking for investments and investment properties. There's probably two different sets of math. And I know for us as investors, we are definitely looking for sought after areas and sought after properties because we still think there's good appreciation there. But outside of residential, we really see other sectors we like more.
Yeah, agree with that.
Okay, we found something we all agree on. Awesome. If you enjoyed the video, give us a thumbs up. Let us know what you disagree with, or if you agree with all of us in the comments. Visit selectfincap.com, get on our free newsletter, and get a look at exclusive commercial real estate investment opportunities. That I know Jeff probably won't pick Detroit, but who knows? It could pop up one day. But we're definitely looking all over the country for the right deals. Thanks a lot,
My
guys.
insurance keeps going up.
Thanks, Dave.